Afternoon, we have a giant GDP revision number in terms of focus for this week and a lot of delayed data coming out as well. I'm Brandon Steele, financial advisor with Mainsail Financial Group here in Bellevue, and our goal every week is to leave you feeling more empowered after each of these market updates and hopefully weed out some of the noise along the way. And this week was a great example of that, although we'll talk a little bit about it too. But more so, what I do want to focus on is some of the data. And keep in mind, this week we did have a shorter trading week as markets were closed on Monday for the holiday. But that did not slow down the amount of data that we received here this week. So we had construction spending, which came out up 0.5%. This was a pretty big surprise to the upside there. So interesting to see that. We'll continue to watch it, given how big the surprise was, and that the prior month, I believe, we were actually down in construction spending. We also had initial jobless claims come out again this week, again, just below expectations again here this week. We also had personal income and spending come out. Personal income was up 0.3% versus 0.4% expectations for November. And then we, probably most importantly, besides the big GDP number, was the PCE index. So basically a measurement of inflation, but again, this does kind of factor in where Americans are actually spending. And the PCE index shows that we grew 0.2% for both core and headline. And the reason I wanted to highlight this is obviously inflation is huge. As a bit of a tip of the cards, we have the Fed coming up next Wednesday, so very relevant in terms of timing. But it also reinforced the CPI number that we got last week there in terms of where we're actually spending as Americans as well. So maybe a reinforcement on some of the CPI data we got there more recently. But the biggest data point that we received this week, of course, was the GDP revision that came out just today on Thursday. And you might remember originally this came out at 4.3%. The revision is something I think a lot of people were watching very closely because of how high and how surprising that number was on the initial release. But it actually increased slightly with this revision. So bumped up slightly from 4.3 to 4.4% for GDP growth, right? So that was a big one. I think we can breathe a little bit of a sigh of relief there, knowing that, even after a revision, we seem to be pretty much in line. And then, the big topic of the week, of course, was really around maybe more on the geopolitical side of it with the concerns of Greenland and tariffs, and all this going on. And what we saw was early in the week, we saw a pretty significant dip as a result of all that, concern, as that was rolled back a little bit and some conversations were had in terms of what that might actually look like moving forward. We saw markets bounce back significantly as a result. So we did see a bit of a whipsaw here this week, but we seem to be on the uptrend here at the moment. So hopefully that will continue. And then be sure to tune in next week. Obviously, we will talk on the Fed decision, which comes on Wednesday. We also have consumer sentiment coming out, so we'll touch on that briefly as well. But before we break, a great question of the week, which comes from David, and basically this is about the expectations for the Fed meeting next week. This is pretty typical and a good thing to cover here every time the Fed's coming up. I think that likely what we'll see now moving forward is a little bit more uncertainty, maybe is a good word for this, in terms of what the Fed will do. Looking backwards, it's been very clear that they're basically going to continue to cut. Now it's not so clear. Now, what I will share is that our expectations are that the Fed will likely keep rates where they are. So uncertainty may be a bit of a strong word around this, but more so the fact that it could go either way moving forward is probably a good way to look at this. Again, this coming Fed meeting, we generally expect that the Fed will keep rates where they are. That said, just keep in mind, there are some reasons that the Fed could be looking at potentially cutting. And again, I don't think it's going to come next week. They're very thoughtful about signaling where they go with this stuff. But generally, we have inflation coming down slightly. Again, it's still sticky. This is not 2% that they're looking for, but they've kind of thrown that out the window. So if inflation does continue to come down, that might take pressure off of their cutting cycle. But also the labor market's shown a little bit of strength. The GDP numbers shown some strength. So that kind of conflicts with it. Although they were watching the labor market for what they may do, it's kind of turned around a little bit in terms of where we've seen strength and where we've seen inflation coming down. So again, I don't think the Fed will cut next week, but we have seen a bit of a shift in the story on both ends there to see where we go from here. Be sure to tune in next week again. We'll catch up on everything Fed related, talk a little bit about what they not only decided, but also what came out of the press conference, which may start to talk a little bit about some of these topics I'm referring to and give us a glimpse of what's to come from there. In the meantime, have a great upcoming weekend, and we will see you next Thursday at 3.